Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody guys, today we will finally take a look at the euro currency because we haven't updated it for a considerable period of time already. But in the beginning, just a few words on our stamp on Great British Pound yesterday. So if you remember, yesterday we have talked about the double repo sell pattern. Fortunately or unfortunately, but we didn't get the confirmed pattern. So actually no entry signal has been formed here. Because take a look, this was first top, close below the 3x3, close above and creating the new top, but we haven't got any close below the 3x3, and after that market just has jumped up. So no opportunity to take in the short position yesterday has been formed here. It means that maybe Great British Pound will show some reaction, some retracement, but it will be triggered by the different pattern. So this market action has destroyed the opportunity for a double repo pattern without no confirmation. So this is not even the double repo failure. This is just total absence of any double repo signal here. So on the Great British Pound, we're just continue watching how the situation will develop. And right now, let's turn to the euro currency. On the euro currency situation, it's more interesting because finally some clarity have appeared here. So on the daily chart, yesterday we have talked about this butterfly. It's also the weekly butterfly. And we said that market stands at 127 extension. Actually, we were waiting here for some clear patterns that could give us the approximately target how deep retracement could be. And also market stands right now at daily and weekly overbought. So this brings more confidence that indeed the retracement should happen, and brings confidence that retracement probably will be moderate. As a result of this, you can see what we have on the top. Here we have very nicely looking evening star pattern. So upward candle, some kind of the doji, and downward candle. So three candle pattern. This candle usually works in the same manner as the bearish engulfing. And here we could use as a target approximately the length of the bars of this candle. So if you will count approximately the length on average, not longest candle, not shortest, but just on average, if you will take a look at count the downside, you will approximately get the confidence support on the daily chart that stands at 2070, 2090. Also guys, as you can see, this confidence support coincides with these previous tops here as well. So that will be also natural support resistance area around 1280 approximately. It means that very probable that retracement will be particular to this area. Why we think that retracement can't stop here, 2166? Well, by some reasons. First of all, because market now at weekly and daily overbought, and that's just nearest fib support. It very often happens when the market hits the significant overbought area. It shows just minor retracement. Second, it's just nature of this pattern, as I said. So usually it suggests continuation. Sometimes it happens that it fails, but we're dealing with the probabilities, right? And odds suggest that this pattern should get the continuation approximate in the length of the candles. Finally, the third reason on this chart, take a look at this candle, the third candle of this pattern takes the shape of the reversal candle, because take a look, market is open, create a new top, and closed below the previous lows. Actually, it closed below both sessions, and that also could be treated as some kind of the watching rings of this area. So usually reversal candles have the downside continuation. On the intraday charts, we have approximately the same picture. So we'll take a look at the 4-hour time frame chart. Here we have double repo sell. So we also talk about it. This also was thrust up, close below 3x3, close above and creating the new top, and close below. That was the confirmation session. On the volatility that has happened recently, On the Great British Pound it was stronger. On here it hasn't hurt the validity of the double repo because we don't have any close even above the 618 resistance of this area, because market just spiked this area and dropped. So double repo is still valid, and minimum target of this pattern stands right here. It's approximately 50% support of the thrust of the double repo, and it coincides with the weekly pivot point that stands around 2110. This is slightly higher than our predefined level on a daily chart that stands approximately 2070, 2080. But that is not all yet. So if you will take a look at the hourly chart, you will see the better shape of this consolidation, and it takes the shape of the hand shoulders pattern. So you can see that's left shoulder, hand, right shoulder. Here we see a real acceleration on the right shoulder, and that is a very good sign for the double repo in general, for retracement. Following this logic, taking it all together, we suggest that probably market should go not just to OP targets 121.60, right? But probably it should follow to the XOP 1618 extension of the double repo on the hand shoulders pattern, and also take a look that coincides with the classical hand shoulders. So if you will measure the distance between the neckline to the top, count it in the point of the breakout, it coincides with the XOP. It's 120.80 area. So you can see it's really very amazing agreement between the different targets, levels, daily, from daily rate to the down to the hourly chart. Currently, guys, by the way, as you can see, market is forming nicely. Nice ABCD pattern here, minor ABCD. So if you will drop your time frame to the 15-minute chart, you will see it. This could become the largest triple to sell. So if you haven't taken the short, think about this opportunity. Maybe you will use it for taking the short position. And in general, the acceleration here to the downside and here, this is a good sign for deeper retracement, because the CD leg right now is definitely steeper than AB, even AB here, and it really tells that chance on the further drop to the 120.80 area is not bad. So currently it looks in this way.